All right, how about now? Yeah, there. See, I test the fucking thing. I literally have a checklist. I wish I had a camera. I would show it to you. I have a checklist, and the fucking thing, it shows showing audio mixer. There's movement when I talk. Everything is fine, and then I click start, and the fucking thing doesn't have audio. I swear, like, how can these people create such huge, complex fucking programs, and then they can't figure out how to memorize that I want this headset with this audio. Honestly, it drives me bonkers. Fuck me. You know, the worst part is that if I have to repeat it, I don't know if I just repeated what I repeated or I didn't repeat what I repeat. Shoot me, dude. Guys, gals, whatever. Shoot me. All right. Let's start over really quickly. All right. Where's equal weighted S&P? Equal weighted S&P, high basing here, previous high, double top. If it is to be a buy, you want to wait until it comes down to this trend line, because wherever this tops out, it's going to end up looking something like this. That's a bearish formation, right? We're in a wave three up. Wave three is going to define a structure, right? And then some point we're going to get something like this. So if you're a bull, you want to wait for it to come back towards this line and then take it to the upside. Okay, this is the eco-weighted S&P. Eco-weighted S&P, what is showing us right now is that the market leaders are lagging and that the rest of the market is kind of catching up. So why is that happening? Two reasons, right? It's either a late stage euphoric move where you're going to see risk on really come into the market and push everything up faster than the broader the market leaders, or it's a bottom. Pick your poison. Is this going to be the bottom for the economy going forward, or is this just a late stage euphoric move before a bear market comes or a big correction is to come? It doesn't have to be a bear market, but a big correction to come. We don't know that. And that's why we have to go back and do the analysis. We got to figure it out. So the way we do that is we look at the small caps, right? And what you do is you take the S&P, divide that by IWM. It doesn't matter that these are during trading hours. And what you're going to see is, let me go out a little bit more. What you're going to see was that in a nice bull market, what you're going to see is the S&P underperforms risk on, small caps, right? Growth is the name of the game. And then we went into a nice balance between the two. Then we went to this euphoric move up where the broader market or the market leaders outperform small caps. And now we're seeing that the broader market, the market leaders are underperforming, but this seems to be more of a correction rather than a new trend. This is a very sharp move up. Now we're getting a very sharp move down. Okay, so if this is to continue and we are to go into some new bull market, okay, you're going to start seeing price start to move up, not in a thrusty kind of, hey, let me fuck with your emotions kind of move, but a nice steady back and forth between S&P and IWM. We can do the same thing, all right? We want to figure out, right, the quality of this move. And what we're going to see is that you're getting a pullback in the Nasdaq from a previous high set back in 2000. Okay, so Nasdaq was really kicking ass in 2000, really kicking ass now, and what we're seeing is a double top. Okay, and this double top now is high basing. We don't know if this is going to continue or you're going to start seeing the Nasdaq underperform small caps. Okay, or they're both going to start to fall, and then Nasdaq is going to fall more. Right? These are ratios. There could be any number of reasons why one under or overperforms the other, but nonetheless, when you take a look at it, it is a double top. It is natural that uh, small caps are going to outperform the bigger market leaders. in terms of the Nasdaq. Okay, so looking at Jets. Okay, Jets have not really performed all that much since the vaccine news. So again, not very convincing in terms of small cap movement. Not very convincing. Um, again, uh, you look at the small caps and you're coming into that resistance area where you have double wedgie patterns, and it's about 1.25. I'm sorry, 1.75 percentage points away from testing the longer term resistance area. Okay, let me adjust this a little bit. All right, so this is a big wedge. All right, this is a big wedge, and then you have this little wedge, and you're coming into this resistance area. So, is this a euphoric move because it's a bottom, or is it, um, late stage uh, bullish move? Right now, you have to conclude that it's just a late stage bullish move before the correction comes. All right, that's the way you have to interpret it until proven otherwise. We had a very nice cup and handle that broke out. Right, you can see it here. I have it drawn out. Okay, nice cup and handle. It broke out. Okay, let's see how much it runs, and then we go from there. All right. So again, the bias is to the downside. There's no way around it. Sorry. All right. So taking a look at the transportation average, right? Double topping here. Not doing a whole hell of a lot. Kind of wedgy looking formation. The fangs, okay. Um, you got points of control all over the place that are just below it, okay. And then if this were to break, then you look for the next point of control, going all the way back to the COVID lows, okay, which is somewhere in the neighborhood of 4,500, and it's at 5,500. So that's a big drop if this point of control gives way. All right, you got certainly a nice big void in here, right? So if price should come down here, then below this, then you're going to see a big drop. All right, we're not there yet. Now, for the bulls, what you want to see? You want to see that this whole structure negates itself, right? It is negated. The whole thing is just a nice little 1, 2, 3 up, right? Little pullback, and then off you go. And there's nothing wrong with that. That's okay. That's possible. But again, I bring you back to reality land. That when you are comparing the value of the market, where it is, and that Apple can go from 2 trillion to 3 trillion. It's a 33% increase. Well, you're going to need a lot of stimulus. You're going to need a lot of QE. You need help. It's not, oh, wait, the economy is going back to normal. We have, more vaccines than, we can shake a stick at, and we got enough vaccines even for the chickens, as we say in Greek, right? So I don't see that right now. I don't see it, honestly. Again, I'm going to show this. Well, here's keep your eye on the leading indicator, right? That Apple is underperforming the S&P, the Nasdaq, and the Nasdaq is holding up while the Apple, the market leader, $2 trillion, is starting to weaken. And we've been keeping an eye on this since the start of November. But more importantly, what I want you to consider and start thinking about, because it wasn't an issue until now, that when you are seeing the market go up, the dollar come down, you're ending up with those examples I showed you before in Pakistan, places I showed you in Turkey, right? It's in Brazil. There's a number of cases that I've shown that the market goes up because of monetary inflation, right? And where's the inflation taking place? In savings. Where is savings? Savings are in the stock market. So you don't necessarily have to have more value. Uh, again, there's going to be consequences, and I talked about that in the video yesterday. That at some point, while the market can go higher, well, that's going to be at the expense of the dollar going lower, right? So you're not net. Remember, to buy a U.S. stock, you need dollars, right? So net, you're actually going to be uh, losing some money owning U.S. stocks, depending on how much the dollar continues to devalue. So monetary inflation in stocks is a real thing, and we've seen this now since March, where the dollar continues to fall, the market continues to rise, and it's not necessarily due to value, right? Because the market cap is way above GDP, way above GDP. It's very overvalued. And again, I'm going to point to this, and let me refresh it, that you are buying stocks at an all-time high that is only producing a 2.78% yield in earnings. And even if you were to reprice it and pretend that we're going to go to 3.4% unemployment and everybody's consuming, everything is wonderful, you're still going to be at about 3.5, which is way, way more expensive than it was back in January. And the dollar is going to be a lot more devalued relative to where it was in January. So you're talking about, big problems. All right, let's continue. Uh, Vanguard, this is the World Stock Market Index continuing in wave 3, kind of pausing. It still has not broken above the vaccine news. Doesn't mean much, but I'm just saying that it is in a wave 3, nothing there. Airlines, we talked about them already. All right, this is the index, double topping. Nice bounce in China. And this is what I said, right? That if you want to uh, uh, buy right here, it's a good risk reward because so long as it remains within this structure, the bias is to the upside until it breaks, right? This whole structure at some point will break. It will correct, okay? So again, it's going for that double top right in here. Let me take it off. You can see it better, right? A little double top right in there. Got a nice little pullback. Let's see if that holds. We don't know if that holds. Um, let's take a look at uh, emerging markets and hold on one second. All right, I'm back. So, yeah, emerging markets coming up against this resistance area. Same thing here. All right, and Japan topping out there. It's just kind of high basing. Australia is continuing wave 3. Nifty 50 is pushing a little bit higher. Cosby is testing the double top right here. I should mark it. It's already marked, but we'll make it a little bit more obvious. Wave 3 looking good. I've always liked Korea. Very nice. Europe pushing a little bit higher. Germany, right, tried to pop out today and failed. Okay, and it failed. UK, double topping here. Broke the trend line a little bit. All right, and we have Denmark, double topping as well. Taiwan continues to push higher. All of Asia is pushing higher. Okay, Brazil, kind of double topping, right? Just below the previous high. Let me mark that. Okay, so we're entering that triple top kind of area, right? The other top being the previous, right in there. Okay, skip that. That's Brazil. Saudi Arabia, double topping. Oil, a little bit higher today, right? And then pulled back a little bit higher. Again, double topping, right? So it's getting closer to the upper part of this trend line here, right? It's getting closer, right? And as we've seen, that price likes to stay within here, all right? So you want to be short up here, so long as it remains in structure, short here, and then buy here. It's quite simple. It's nothing magical. Bitcoin, all right? We're starting to get that willow kind of big drops. Again, on a closing basis, we put that there, right? On a closing basis, we're almost at all-time highs on a weekly. On a monthly, we already broke all-time highs on a closing basis. On a daily, okay, it's just below the all-time high. So it's double topping. Little bit of a pullback is quite natural and normal. No big deal, right? And that's why I said you should remove a little bit of your money, take a little bit of profit, comes down, maybe about 15, 14 and a half thousand dollars. You want to buy it up again, okay? So that's quite simple. And again, I love the way Bitcoin trades. It just makes a whole hell of a lot of sense to me. And I've been a lot more accurate with Bitcoin than anything else. Let's skip these. Gold, we expected the wave 3 down, right? Failed move, comes fast, moves in the opposite direction. Now we have a 1, 2, 3. The nice flag broke, right? Let's see where this ends. I'm interested to see where this ends. We don't know when a wave is going to end, but where it ends is going to tell us a lot. Now we've got to come back to this chart. And I'm going to show you again that when you see the stock market rise and then you see gold fall, it's been a repetitive pattern now for quite a while. What ends up happening is the stock market corrects and then you start seeing gold go up again. Right? So I think of gold as kind of a leading indicator in this sense, right? Gold sells off, market goes higher, and then the correction comes, goes back up, right? Same thing here, okay? Same thing here, right? And now we're seeing the same thing, where gold is underperforming, stock market is up. So at what point does this start to correct? All right, so keep that in mind as well. It's not the holy grail of analysis, but think about that. All right. What else? Commodities pushing a little bit higher today, which is fantastic. We've, been trying to figure out, is this the move that's going to make commodities into a nice long-term bull run? Don't know. I still think we're going to have a sell everything rally at some point, and that would be a great opportunity to get involved again. All right, because then stimulus is going to come in, QE is going to increase, blah blah blah, and then of course commodities are going to go much higher. Agriculture continues to push higher. Okay, precious metals are falling a little bit. Commodities are double topping again. Sugarcane is correcting. Corn pushing a little bit higher. It's still in a tight, so expect lower on that one. Wheat, good time to buy if that's your thing, right? So long as it's above this trend line, it's bullish. Okay, so there it is. As long as it starts to move to the upside, you can take it. Steel continues to push higher. Soybeans are just fucking explosive. Nat gas, forget about the dollar, right? It broke, bounced back up. At what point is this going to start to really start to fall apart, right? That's the question. Is it going to start to pop here or is it going to start to fall apart? We still don't know. No resolution. The 10-year. 10-year, nice little pullback. But again, so long as it's above this trend line, we're looking for another move higher. No decision on that one, right? Aggregate bonds have broken out, right? Not doing a very good job pushing higher in a thrusty kind of move. Not a bad move, but not as thrusty as we expected. And junk bonds, forget about. TIPS versus TLT. TIPS are still showing recession and weak inflation, so forget about that. The stock market, The banking system in Europe, all right, had a nice pop, but it's kind of stalling, right? Again, this is not valid until it hooks. So it's just there for show and tell. Um, Emerging currency funds, right? They broke out, no follow through for now. Waiting for the dollar. Apple, okay, these are the fangs, right? Nice big drop today, almost 3%. 3% drop. Now, when shit like this starts to happen on no good reason, you want to start to pay attention, believe me. That's what happened last time during COVID. The market went down for no apparent reason. Everybody's looking for news. They're like, oh, fuck, I don't know. It just went down. When that shit starts to happen, usually it's a sign that something bigger is coming. Amazon broke. Microsoft broke. Facebook about to break, but it popped a little bit. Netflix broke. Google broke. Nvidia has broken, grinding lower. Tesla, right? What is this? What does this show you? This shows you that the market is not efficient. It's not a perfect pricing mechanism. Just because Tesla has been added to the S&P 500, all the funds uh, now, all the ETFs now must buy it, right? They're not buying it because there's more value suddenly that just popped up a few days ago, right? They're buying it at once, pushing price higher only because it was added to the S&P 500. Okay, so and that's what happens quite often. Think about this: it's up 37% since the Head and Shoulders broke, and why? Because it was added to the S&P 500. Complete and total fuckery, right? So remember that when uh, people are buying the S&P 500 index, they don't care where the money goes. Right? It could be undervalued, it could be overvalued, it could be whatever. They just go out, they buy it across the board, and it doesn't matter what the issue is. Right? This is the mechanics of trading. And then eventually, at some point, when something blows up, reality hits them, and then they start to correct. Okay, so that's why I'm telling you that don't think that QE, don't think that deficits don't directly uh, manipulate the price of the indexes. They do, very much so. And they don't care what the economy is doing, right? They don't care about anything until they do. They always do at some point, they will. It's just the way it works, right? It's just you don't know when that point is. So you look for clues, and that's why we do this analysis. Delta, big move, okay, but nothing happened. It's up 4%, but it went nowhere. American Airlines now broke into structure, popped out again. Okay, anything above this trend line hither, you can buy to the long side. Southwest, same thing. Big move today, right? 3% went nowhere. Alaska, testing the previous high. JetBlue, big move today, 4% went nowhere. Spirit, nothing. Allegiant, nothing. Copa continues to push higher. Nothing in EasyJet, China Eastern, and forget about the rest. So that's it. Market just closed. Let's take a look at what's happened, right? So not much movement in the Nasdaq. It's up 0.21%. S&P did a little bit better of 0.9%. Dow Jones up 1%. And New York Stock Exchange Index up 1.25%. Okay, it actually closed at the previous high. VIX remains at 22. Okay, nothing special there. Sorry. Sorry, that was involuntary. Taking a look at the market internals. All right, market internals, energies leading, financials, industrials, materials. Consumer discretionary is in the middle of the pack, and information technology towards the bottom. Healthcare towards the bottom. Uh, Again, how many days in a row now have we seen that the market leaders are not performing, right? For weeks now, for weeks. How about on a monthly, on a 5 day? It's about 1.3% down. Energy, industrials, financials, materials leading, lagging utilities, healthcare, consumer, and you have technology and discretionary in the middle of the pack, not very bullish. What else? What else? Let's see where this closed up, down 0.277. And that's why I say let them bid up price on themselves. Let the bulls bid up price on themselves. There's nothing wrong with that. Let them. Let them. Let them keep bidding up price until they're done and exhausted, and then, we're here. We're here. We're just waiting. We'll wait. It's comical. Never get in the way of somebody that's fucking themselves. Just let them do it. And they can talk smartly and I told you this and I said this and I let them. Yes, my friend, you're right. 100%. Yes. Buy bid up pricing yourself. Yes. And then reality hits. All right. So that's it. Thank you very much. I'm terribly I don't know how to fix this. Honestly, I have like an airplane checklist, and I use it every single time. And now I'm gonna put check with listeners as a checklist, and not the little red green red thing that shows my voice going back and forth. Um, I don't know what to tell you, honestly. That's it, guys. Thank you very much. I'll talk to you soon, probably tomorrow. If something happens and develops in between, then I'll definitely come on and give you the scoop. Don't forget, come down patreon.com/RealMacro and subscribe um, right here. Okay. At least like the video, even though I fucked up with the audio. It's so embarrassing, but yeah, cringy. What can I do? Hopefully, I'll get used to this and things will get better. All right. Lastly, we're expecting corporate earnings to come out soon. We want to see an improvement here. Okay. Um, let's see what they're going to be. I think 94, 95% of the market has already reported. So I want to see what the corporate profits are going to be. On the good news, the U.S. now is number 20. Rwanda has beat us in money printing. Huh? That's quite impressive. We are number 20 in money printing at 24% of GDP in the last 12 months. So, way to go, USA. Number one, my friend. We used to be 13. Now we're number 20. How fucking embarrassing. How embarrassing. Unbelievable. All right, guys. Take care. Thank you again. And I'll talk to you soon. Bye bye.